Welcome to the Kapital News. I am your host, Alex Kreitis. Today is June 26, 2019. Thank you so much for joining me. So, the title of today's episode is A Headline Market. No surprise. That's what these things have been for months. For months. With seemingly no end in sight. What am I talking about today? Well, unfortunately, it has to be more U.S.-China trade talks. We had Secretary of the Treasury, Stephen Mnuchin, giving an interview this morning on CNBC. Of course, right around the start of today's trading session. You can call that a coincidence, or you can say it isn't. But nevertheless, it was headline news because Stephen Mnuchin said that we are 90% of the way there, or we were, as actually the correction. We were 90% of the way there. Remember, this is the same gentleman who told us that we are in the final lap. This was a couple months ago. This is also a member of the team who was basically saying, well, you know, this was Larry Kudlow now. Larry Kudlow was saying there was going to be a signing ceremony. And I think that might have been on CNBC as well. So they know what they're doing. They're going out to the financial mainstream media, CNBC, Fox Business, Bloomberg, all three, to move the markets. They know what they are doing because yesterday was a down day in the markets. And of course, the president can't stand that because he is obsessed with the stock market. So he sends his team out there. Get out there, Mnuchin. Get out there, do your thing. And he did. And the markets rallied on it. They loved it, thinking that the deal was 90% done. Listen, we've been saying here for months, based off of the sources that we read in the analysis that we conduct here at the Kapital News, that this thing was probably at least 80% done months ago. So I'm not surprised to hear the Treasury Secretary say it was 90% of the way there. It was always going to be that last 10 or 20%. Remember, I've stated this in previous podcasts. You break this deal down, it's 100%, right? You break this deal down into three parts. The first 40%, no problem. The U.S. and Chinese, they just had to sit down and say, can we do this? Will you let us do this? Yeah, sure, no problem. They just had to sit down and have a conversation. Not a big deal. The next 40%, that's a little trickier. That's why you had all the back and forth between Washington, D.C. and Beijing. All the back and forth for several months. These are the talks. Can we get over this next 40%? And then when it got down to it, the final leg, the final lap, if you will, it's the remaining 10 to 20%. So is either side going to budge on this remaining 20%? And we're going to get to that here shortly. So what happened on Wall Street today? Well, despite the headline-driven news, first thing out of the gate, the S&P closed down 3 points. The Dow shed 11. The NASDAQ gained 25 points on some stronger earnings from some tech companies. The Russell 2000, the small cap index, lost 3 points. The Dow Jones Transports actually gained 0.7%, and the New York Stock Exchange lost 0.2%. We continue to see an increase in the price of oil. We now have WTI trading at around $59 a barrel. Will it hit the $60 threshold? Will it cross above it? And if it does, will it stay above it? Serious question, given what's taking place geopolitically speaking. Brent crude is now trading at $66.25 a barrel. Will it get back to $70? And if it does, will it stay above it, given the geopolitical tensions that are taking place between Washington and Tehran? Interesting question, because I thought not too long ago the president was always calling up OPEC. Hey, these oil prices are too high. You got to get them down. I'm the tough guy. You got to listen to me. Well, the president seemingly has no problem with these oil prices going up. Seemingly. We'll see. It's always it only takes a tweet, only takes a phone call. I could stand corrected here as I speak because who knows if he's tweeting or saying something right this minute. We have gold pulled back a little bit, now trading at $1,410 an ounce. Silver trading at $15.23 an ounce. Uncle Sam's U.S. 10-year Treasury caught a little bid today, on the yield, that is, gaining 2.75 percentage points, now yielding 2.049%. 2.049%. Will it stay above the one handle, meaning 1.9, 1.8, anything with a 1? One handle, 1 point, blah, 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 anything, okay? Will it stay north of 2? What are the expectations? Because we were discussing here yesterday a couple members from the Federal Reserve coming out and sounding a little less dovish, saying that the Federal Reserve is an independent institution. It is insulated from short-term political pressure. A call out directly to President Trump and his administration, calling on the Federal Reserve to cut interest rates and to embark on another round of quantitative easing. The exact quote-unquote cure that has been killing the patient, i.e. the United States economy and other economies the world over, from what we have done and continue to do and what other central banks have done and continue to do. Yet here we have a president of the United States calling for more of the poison to be thrown into the system. Why? Because he believes that it'll juice the markets and he can have all-time highs in the markets and he can pat himself on the back like he did yesterday, saying, "Thank you, Mr. President." Not me saying that. That was the president thanking himself. Okay? Can't make this stuff up. So that's Uncle Sam's Treasury. What is it saying? Will there be a rate cut? Anybody's guess. It really is. Because the next one coming will be at the end of July when the Federal Reserve meets. Before those comments from Jay Powell and President Robert Kaplan out of the Dallas branch of the Federal Reserve, it was basically baked into the cake. Now there's some wishy-washiness taking place in the markets. Well, maybe it's just going to be 25 basis points, or maybe not at all. Wouldn't that be interesting? Wouldn't that be sort of a smack in the face to Donald Trump and his administration? I mean, that would really heat things up. Because we're also going to talk about Donald Trump because he had an interview this morning with Maria Bartiromo on Fox Business. So they're hitting it from all sides, folks, trying to ramp up these markets, trying to get them up because it was a down day yesterday. We have the VIX, the volatility index. Little change, but nevertheless, it shed a couple points. Really not even a couple points. It now trades at $16.21. So we have Mnuchin and Trump, the dynamic duo, trying to do the 1-2 punch to get these markets to rally. Didn't happen. It just didn't have staying power. It happened at the beginning of the market trading day, but it did not have staying power, which, to be honest with you, I imagined that the markets were going to sell off. Now, I don't like to do this back and forth the day stuff. It's not what I do. I don't like to give what's going to happen tomorrow predictions. That's just a fool's errand. But I was like, you know what? It's going to be very interesting to see what takes place throughout the trading day because you had the president and the Treasury Secretary out there undoubtedly trying to move the markets to the upside. They were successful initially. And I said, well, you know, again, with my diminishing marginal returns, the boy crying wolf, how many times is the market going to hear it and believe it? You know, I mean, some of this is just simply algorithmic trading. There's headlines put out there in the news. You have all of these fancy computers just reading headlines and trading off of headline news, not making this stuff up. I don't fully understand it, and to be honest with you, I don't want to fully understand it because it's just mayhem. It's just absolutely crazy. This is why everything is disjointed. This is why looking at the fundamentals, especially if you follow the markets closely, and if you're looking for swing trades or if you just pay attention to these markets closely, you're pulling your hair out. Because everything that you used to do, fundamentally speaking, is basically you throw the book away. I mean, you even have Warren Buffett saying that. You have Stanley Druckenmiller, who we talk about here all the time, legendary hedge fund manager. They can't make heads or tails of what's taking place in the marketplace. That's not good. That's not good. And it's not just those two gentlemen. It's a whole slew of people. You can't make heads or tails of this. Why? Because you have central banks at the helm like never before. And now you have a president of the United States obsessed with the stock market who takes to Twitter and makes headline news. It could take literally a minute for him to pull out his phone, send something out on Twitter, Press send, and there it is. And you can have markets the world over rallying or crashing. It all depends on what he is saying. All depends on what he's saying. That is too much power. To me, that's an abuse of power. Because he knows what he's doing. Because he's obsessed with the markets. If he wasn't obsessed with the markets, maybe there'd be a little bit more leeway. I'd really have to think about that a little bit more. But that's not the case. He's obsessed with them. He pats himself on the back. He congratulates himself for what takes place in the markets. If it's up. If it's down, it's not his fault. It's somebody else's fault. That, to me, goes to the question of credibility. That, to me, shows poor leadership. I did it. I won this battle. If I lose, it was my soldiers' fault. That would be a terrible general. Terrible general. Terrible leadership. So this really irks me. As you can tell, this is something that I have to talk about on a daily basis because it's that important as far as I'm concerned. It's an abuse of power. He told George Stephanopoulos in his ABC interview last week, or whenever it was already, read Article 2, George. Read Article 2. I can fire who I want. I can do X, Y, Z. I have the power in Article 2 to do blah, blah, blah. It doesn't say in Article 2 that you're a financial dictator. It doesn't say in Article 2 that you are supposed to basically manipulate the stock market for your gain. You're not supposed to do it. It's an abuse of power. This is supposed to be a free market capitalistic system. Let the people determine what the price of the stock market is. Not you, sir. Not you and not the Federal Reserve either. Again, I voted for Donald Trump because of what he said when he was a candidate and as a civilian, attacking the Federal Reserve from the right side of things, saying they were creating bubbles, they were creating malinvestment, they were creating income inequality, they were creating inflation. Now, as president, he wants it. So I can't stand for it. Just because I voted for this guy doesn't mean I'm just going to follow him blindly. Don't get caught up in the cult of personality. This is why we have $22 trillion in debt. Because, well, it's my guy. I voted for my guy. I love my guy. He can't make a mistake. He's my guy. He can't do anything wrong. He wants to spend $2 trillion? Go ahead. My guy. Then he loses or he runs out his 8-year term. Get the other guy in from the other side. Now you don't like it because it's not your guy. But guess what? Half the other country does. So this guy wants to spend $2 trillion. Go right ahead, no problem. Before you know it, boom, $22 trillion and counting. That's all it takes, folks. All it takes. Divide and conquer works very, very well. That's why they continue to do it. That's why they continue to use it. And everybody just like zombies, because everybody's on Prozac, everybody's on Xanax, everybody's on Valium, everybody's high. Just walk like sheep to the slaughter. That's what we do. But President Trump was having his interview, and of course, the talks between the United States and China, front and center, what's going to take place. He's right back at it. Again, he's threatening China with more tariffs. He again went to his quote-unquote Plan B, which is what we're doing right now, by the way. Plan A, I guess, supposedly would be a trade deal with China. But Plan B would be to continue what we're doing and to actually escalate. So slap more tariffs on more goods. Now, he was a little wishy-washy as to what the percentage would be, because right now we've escalated it up to 25%, but he's saying, well, maybe it won't be 25% on everything else. Maybe it'll be 10%, blah, 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 going back and forth. I mean, this is the wishy-washiness. This is I'm a strong man, I'm bluffing, but we're kind of getting closer to the edge. We're getting closer in this game of chicken. Maybe I'm going to veer off. This goes to the question of credibility. Do you want to play the strong man? You better follow through with some of these things. Otherwise, because all this stuff is starting to come to a head. These trade negotiations, this is sort of it. This is the big kahuna here this weekend. Can President Trump and President Xi get something done? I truly hope that they do. I'm just very skeptical that anything will, because we've been jerked around for 6 months by this president and his administration saying there's going to be a signing ceremony in Mar-a-Lago. By the way, folks, that was all the way back at March. It's the end of June, and there's no end in sight. So I'm getting sick and tired of it. do your negotiating in private and get it done in private. And then when you do, let everybody know what happened. Just say, look, as far as the United States goes to Beijing and as far as the Chinese are coming to Washington, D.C., as long as there's back and forth, you can take that as a sign of good things. You can take that as a sign of progress because we're continuing to talk. I think that's rational. I think that's reasonable. The specifics, we'll get to you on that. We have specific things. I mean, you can throw out some bullet points. Both sides are going to do that. But to know all the nitty-gritty details, I mean, it's a sausage-making process. You don't need to be known. Everything doesn't need to be known to everybody all the time. You're negotiating. I get that. I respect that. There are things that need to be discussed with the Chinese and other trading partners around the world. I applaud the president for bringing this front and center. I applaud the president for doing something about it. What I don't like is being jerked around for 6 months, telling everybody that this is going to be a great, fantastic deal, that we're going to sign some of these documents. There's going to be a signing ceremony at the end of March, and then there's nothing. I don't like it. I don't care if I voted for this guy or not. Doesn't mean I'm going to vote for him next time. Doesn't mean I'm voting for a Democrat. I might stay at home, which is my right. I have the right to vote, and I have the right to not to vote. Think about it. Now, one of the other interesting things here, because who knows what's going to happen at the G20. Of course, the markets are hopeful that something happens, but hope is not a strategy. But finally, some further vindication here at the Capital News for what we've been saying now from a position of authority, if you will, a member of the Bank of Japan, their central bank. You have a headline here. You have a little bit of story I'm going to read to you. Trade row involves issues beyond economic problems. Well, haven't we been saying that for quite a while? The trade friction between the U.S. and China involves significant issues beyond mere economic problems, such as the competition in advanced technologies and national security. And it may be difficult to resolve these issues fundamentally in a short period of time, the Bank of Japan's Deputy Governor, Matsuzumi Wakatabe, said in a speech. This is exactly what we've been saying for a long time. He's calling out the remaining 10 to 20% of the deal. If Donald Trump and the U.S. is correct in making the assertion that China has just been ripping us off left and right for 20, 30 years, why are they going to give up the goose that has been laying the golden egg, or eggs plural, for a generation? They're not going to do it just because you go to a negotiating table or you slap some tariffs on some goods, which they're not paying, by the way. I know the president wants to make it seem like the Chinese are ripping out their pocketbook, sending billions and billions of dollars to the United States Treasury. But that ain't so, folks. It's the importers of this in this country who are paying it. It's the consumers in this country that are paying for it. And we import a lot more from them than they do from us. But nevertheless, allow me to continue this statement here from the Bank of Japan. The negotiation is still underway, so we should not be too pessimistic. If the trade friction becomes prolonged or persistent, however, downward pressure on the global economy may heighten not only through the direct effects of the tariff hikes, but also deterioration in firms' fixed investment stance and financial market sentiment. Agreed 100%. Continues. If the slowdown in overseas economies becomes prolonged, downward pressure on domestic demand may strengthen gradually. In addition, there remains a risk that the scheduled consumption tax hike this October may push down domestic demand and eventually economic activity and prices. And of course, there he's talking about a scheduled consumption tax hike in Japan. So I don't mean to give anybody a heart attack out there in the United States. We're talking about Japan increasing their consumption tax, which has been pushed off, I believe, several times in the past because it's not a good thing. It's not a good move, but Japan is not the best economy in the world either, folks. There is a slowdown. But finally, some further vindication here at the Capital News. We have somebody, I guess you could say, in a position of leadership. Of course, this is a central banker, but nevertheless, it's out there. It's in the mainstream media now. This goes beyond soybeans and cattle and pork and wheat and corn. We've been saying it here for months. This is the nitty-gritty. This is one superpower, the United States, pitted against an up-and-coming young lion in China. That's all it is. You watch National Geographic, you see the old lion, king of the pride, and you got some young cub coming up, going to take on the old man. Sometimes the young buck wins, sometimes he loses. That's where we are right now. This is a crossroads. The United States is undoubtedly trying to slow down what the Chinese are doing. And again, I applaud the president because what the Chinese are doing is criminal, but there's no question that what the United States is doing on the other side is probably criminal too. They're trying to hack into our systems. We're undoubtedly trying to hack into theirs. This is the game that we play, folks. This is the game that we play. Just like we complain that other countries are trying to meddle or are meddling in our elections, it's quite laughable because we are overtly, not covertly, but overtly trying to overthrow the regime in Venezuela, and we're trying to overthrow the regime in Tehran, in Iran. And I'm sure a whole bunch of other places too. It's okay, again, for us to do it. But if somebody else there does it, we got a big problem with that. So this is a market that is driven by the headlines. Yesterday, it was the members of the Federal Reserve coming out and saying, well, we're not quite as dovish as you all thought we were. And today, you have the president and company coming out trying to say, well, we didn't like that the market sold off on those comments yesterday. So we're 90% there. And of course, the markets rally, but they run out of steam. So for these markets, they're in a trading range right now. They're on pins and needles. Because I'm going to wrap this podcast up, but we continue to have data come out. U.S. durable goods orders drop for the second month. I mean, you have a widening of the trade gap or trade deficit for the month of May. Not to mention that the month of May, if I remember correctly, was a record fiscal deficit for the U.S. government, if I remember correctly. So the month of May, just so far, it has not been proven to be a good month for much of anything from an economic standpoint. And of course, this week we're still supposed to get the final revised Q1 GDP figure. That's going to be interesting to see what happens there, because that number is going to come out when the president is overseas at the G20 meeting. So if you want to put on your tinfoil hat, I wouldn't be surprised if it's a high number, that it confirms 3.1% or 3% somewhere thereabouts, because it gives the president ammunition to go in the negotiations. Say, look, we're not hurt. We're at 3.2%, 3.1% for the first quarter. We're fine. We're bringing in billions of dollars. We're not hurting. It's fine. So, if I hope we can make a deal, but if we don't, we're doing absolutely fine. We're getting billions of dollars from you. I got 3.2% GDP growth. Everything else is just small potatoes. Don't got to worry about it. Now, conversely, if it's 2 point something, that's going to be a problem. So it's going to be interesting to see what comes out with these numbers. Again, one number is not a trend, but you have to look at these things over time so you have a trend. That's what a trend is, looking at data points over the course of time. And as we have done so here at the Kapital News, we continue to paint a picture that is not so pretty. It's not so rosy. And that's what we're here for at the Kapital News. To tell you the truth, to give you the data beneath the headlines, because it's beneath the headlines that actually makes the news at the end of the day. It might not be tomorrow, might not be next week. We have people manipulating these markets. We have central bankers on overdrive. We have a president obsessed with the stock market and tariffs and tweets, and you don't know what he's going to do or say. And that just causes a whole bunch of uncertainty in the business community. And that's why you're not seeing a whole bunch of spending, on top of the underlying fundamentals, which say, no surprise that there's not a lot of capital expenditure out there in the marketplace, because we are in the midst of a global economic slowdown. We are hitting the threshold of what monetary policy can do. We will be hitting the threshold of what fiscal policy can do. There are political risks, there are geopolitical risks, there are economic and financial risks all over the place. Simply signing a trade deal is not going to alleviate all of these issues. It's what we've been saying here for months. It's what the Bank of Japan has finally come out and said. They are not expecting a trade deal because they know what remains is not what either side, the United States or China, is willing to give up. The United States has made comments that anything involving, I should say, these tariffs, meaning that the Chinese are going to say, well, we'll come to the table or we'll meet you somewhere, but you're going to have to remove the tariffs. Not happening. So I don't know where a deal is going to be struck unless, of course, finally, President Trump can work his supposed magic with President Xi. It's going to be an interesting weekend, and the Kapital News will be here to keep you posted. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. This is the Kapital News. I am Alex Koritis. Godspeed.